Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning. Ira Epstein of Lynn & Associates with this morning flash update for Friday the 24th of February 2017, just after 9:20 a.m. Central Standard Time. All right. You know, yesterday I'm a little bothered by what I'm seeing. Yesterday we had an outside day up in the S&Ps, and today you came down and you took out the low of yesterday. That's what I call a bull trap, and it's the first one that I've seen in a long time, and I'm wondering what that means. Just a few minutes ago, I got a call from Fox if I wanted to be on today and talk the bull side of the stock market. And I said, you know, I don't know that I can. And the reason is with that type of action, I think that I'm more on the sideline today than I am anything else. In the metals, a big rally happened this morning, and as you can see, you carried up sharp. You've broken off from there. In fact, silver sold off from around 1845 to about 1832 just minutes ago, but it's up here very nicely. I still contend that a lot of this has to do with what is going on in Europe, and specifically the Netherlands and France, as the populist parties there just might be able to win the elections. And if they do, they're talking of pulling out of the EU. So what you're getting is money that is scared, buying the precious metals. That's what I think is going on. Proof of that is the Bund yields and some of the yields on the shorter-term notes out of Germany. Well, they've come down sharply. I'll show you that in a minute because I did something on that. On the energy markets, you know, there's a lot of articles this morning out about the record open interest in futures and options on futures in the crude. And what's really going on is traders are betting that the market's coming back into balance, and even with the oil shale coming up, they're taking enough off out of the Brent and so on where we can't make up that difference. Now, the proof of the pudding is, does the market move from what's called a contango into a backwardation? And that's what I think these bets are all about. What that means is in a contango, the front month, like the April, would be underneath, say, the May, maybe sometimes by as much as $1 in the past, and that allows you to buy the front month, put it away in storage for a higher sale, hedge it up, and let's assume it costs you 30, 40 cents to store the oil. Well, the problem is if you make $1 on it, you got 60 cents a barrel. Multiply it times the barrels, and you get the math. It's the simple workings of it. Well, when you move to the other way, the backwardization, what happens is the April becomes more expensive than the May. You no longer can make money storing the oil, so it starts coming out. What causes that? Strong demand. So it's something that the market is betting on. Start paying attention to that for those of you that are looking for fundamental reasons to look at some of those markets. In the markets in the grains, you're getting some selling pressure today in the wheat market. Looks like Chicago wheat is breaking down compared to some of the other wheats, in fact, the Minneapolis and the KC. We had a good bond run, as you can see, and it's still continuing because a lot of traders still don't believe the Fed is going to pull their trigger in March. And the reason is, in part, if you watch the notes and you read them, they still want to see a budget and the infrastructure spending, and they're not going to get that in time for that meeting. President Trump said around the 13th. Let's assume he releases it on the 13th. Is that enough time for them to read it and make a decision on the 14th and 15th of March when the FOMC meeting happens? It might be. I don't know. And you're also probably getting some buying here out of Europe that is a bit scared about those elections that I've been talking about. Now, in fundamentals today, and by the way, you're going to have a cattle on feed report later this afternoon. Fundamentals today, new home sales and inventory up 3.7%. That's way shy. They were looking for 5.7, so that's a disappointing number. Home sales inventory, 5.7 months. Look at the average price of a home. It keeps climbing. I remember when it was 270, 260 recently. It just every month it seems to be adding, and that puts pressure on people that are trying to buy a home. University of Michigan, the Consumer Sentiment Index, 96.3, in line with the 96 preliminary. All these numbers are actually in line, except this one, the Expectations Index, which has jumped again. Now, here's that part that I'm telling you. Germany's two-year yield continued to plunge off fears that Miss Le Pen might win the spring election. Yields are down. If you want to go in and take a two-year note, believe it or not, you're going to pay. It's a negative 0.95% this morning. Yes, you're going to put money into something, you got to pay to put it in there. Canada's CPI climbed to 2.1%. See, add all that up, and I think it tells you why the metals have been well bid. It tells you why the euro's sort of flat here in the 106 area, just not doing an awful lot. I want to remind you about my market research. I'd love for you to start off your morning looking at what I do. Now, here's what I mean. I put out a video. Not only do I put out written recommendations, I back them up with a video. Some of you even like to get the oral updates, and we make that available. Here's how you get them, by the way. You give us a call, and you can go to our website, and away you go with it. And you'll see up here in a moment an icon, and just click on that if you're watching me on any YouTube video or under other websites here. But it's going to look like this, the video. The video's the key, a big key of what I do. Why? I'm able to go through 40 charts in the morning, takes about 10 minutes to review them, and I do them the same way every day. I start off with the stock indices, then I'm going to move into the currencies, the bond market, the metal market, so on and so forth. I'll cover all the complexes. And I'm giving you the setups, and I'm telling you from my experience in the market what I think the pros are doing, where they're buying, where they're selling, and when I'm putting out a written recommendation, I'm backing it up with the video showing you why I've put it out, where I think you're at, good, bad, ugly, where the stop has to be. If you're getting that from other people, don't pay attention to this. If you're not, it's a free 20-day trial. Simply give us a call, go to our website, click up here or under us on many websites, click the submit button on the bottom, no credit card. We want to put this in your hand. I'm Ira Epstein. You have a great day.